Thank you so much. So we now look at the practical exam type question. We've looked at the basics example on how to account property, plant, and equipment. Now let us look at now the practical exam type, which I got from this website. It's important to acknowledge from this educh.com. So educh.com, that's where I got this. I got this example. So those you can search, and you shall find this good example. So now this is a practical exam question on how to account for property, plant, and equipment. So in this exam, we're saying Delta is an entity which is engaged in the construction industry and prepares financial statements to 30th September each year. The financial statement for the year ended 30 September 2015 are shortly to be authorized for issue. The following events are relevant to the financial statement. Okay, so I'm saying this Delta prepares financial statement up to the year end 30 September. Now this year is 2015, and the accounts are almost ready for issue. Now on August 2015, Delta purchased a machine from a supplier located in a country whose local currency is the groat. The agreed purchase price was 600,000 groats, payable on 31st October 2015. The asset was modified to suit Delta's purposes at a cost of $30,000 during August 2015 and brought into use on September 2015. The director of Delta estimated that the useful economic life of the machine from the date of first use was 5 years. Now, the exchange rate that was applicable were as follows. 1st August, 2.5 groat to $1. And 1st September, 2.4 groats to $1. 3rd September, 2 groat to 1. And 31 October, 2.1 groats to 1. Now, before you begin to answer this question, it is important that you take note of some key items in this question. One of the key items in this question is that the year end is in 30 September. That's number one. So now, on August 2015, meaning just 1 month, is it 2 months? Yes, 2 months before the year end, this Delta purchased, because the year end is 30 September. Now, on 1 August, it's 1 August. So meaning the whole August we count 1 month, and the whole September 2 months, meaning 2 months before the year end. Very, very important. Delta bought this asset from supplier. The second item is that he was buying from a foreign supplier whose currency is groat. And then his Delta's, the currency was US dollars. Now, this asset, even though it was bought on 1st August, it wasn't paid there and there. It was paid on 31 October 2015, meaning it was paid, let's count, after purchase, it was paid August 1, September 2, and October 3. So after the purchase, it was paid 3 months later. Again, after the end of 30 September, it was paid 1 month later. Are we getting the scenario there? So after it was bought, it was paid 3 months, because it was bought in August. We count the August, September, even October. So 3 months after the purchase and 1 month after the end. This is very important. Again, it's very important for you to note that he also incurred 30,000 modification, and this is already in the local currency. It is not going to be changed. It's already in the local currency. Now, it's also important that during August, this asset was brought into use on 1st September 2015, meaning 1 month after purchase and 1 month towards the year end. 1 month after purchase and 1 month toward the year end. That's when the asset was brought into use. Great. So like I've mentioned that the year end for the financial statement is 30 September. The purchase was 1st August and the exchange rate was 2 groats. The purchase price was 600 groat payable on 30 September, 1 month after the end, and 3 months after the purchase date. Good. The asset was modified at a cost of $30,000. There are two things to note in this one. One, the modification cost is already converted into US dollar, so no translation is needed. Secondly, the modification cost or cost of bringing or making an asset into usable state forms part of cost of an asset. I'm sure you know that initial recognition recognize the asset at a cost, and all these costs that are relevant to bring an asset into the state to be used is part of that one. Secondly, lastly, the asset was brought into use on 1st September, 1 month before the end, and 2 months before the asset is fully fully paid. Very, very important. Because it was it was brought into use on September, 1 month before the end. We can even say 1 month after purchase. 1 month after after purchase, and 2 months before the asset is fully paid. That is very, very important for you. Therefore, now, therefore, the machine and the field reliability would be recognized in the financial statement using the rate of exchange in force at transaction date. For example, now, what value do you recognize the asset? Because here there are two big things involved. There is an asset. You need to debit an asset, meaning you need to recognize the total cost, the initial recognition, the total cost. How much are you going to recognize on that date of purchase? So it will be recognized at the date it was bought, not at the year end of the accounting period, not at the time it was fully paid. No, not at the time it is being put into use. No, but it will be recognized on the date of purchase, which is August. So on 1st August here, what was the rate? It was 2 groat. So this asset will be recognized there. It will be recognized at 2 groat, meaning it will be, therefore the initial carrying amount of both items will be, so this, I'm sure the exchange rate, you know how it moves. Sorry. Just have to pick a call. Thank you. So meaning the asset will be the conversion. I'm sure you know the conversion of 600 groat to that one. That's just to divide. So to be 240. That is the cost for the purchase. Now we need also to capitalize that modification cost. Now here, first of all, the liability is a monetary item. So it would be translated at the end of September 23. Now, so you know that on 1st August when this asset is being bought, this is also, the asset is being recognized at $240,000 as an asset, which you are debiting an asset. You're also crediting a payable or the same amount, 240. But this payable at the year end now, 2 months later, when you are closing the account, it needs to be retranslated, but not the asset, not the value of an asset. It's a payable because you haven't paid. So the liability is monetary form. it would be retranslated at the end of 30 September using the closing rate of 2. For the payable or receivable, at the year end, they need to be retranslated at the prevailing rate. So what was the prevailing rate here? It was 30 September, it was 2 groat to $1. So this will be retranslated. So, and to be said to be 2, it will be now 300. Are we getting there now? Now, there's something interesting here now. Now, imagine if we paid on 1st August, we would have paid the $240,000. By now, we didn't pay on that particular date, and the year end is coming on September, so we're translating. Already there is a loss here. If you can see, already there is a loss that we are incurring of $60,000 on 30 September, not on the date we are going to pay. Just by the closing, already the company has incurred a loss of 60,000. Now, as shown, so this one will be shown as a current liability. Why? Because it's going to be paid in October, just 1 month after the end. So it's current liability. It will be paid on 1st October, 1 month after the end. The exchange difference of 60 is recognized in profit and loss. Very simple. In this case, a loss, because if the asset was bought for cash on 1st October, it would have been 240, but it was paid on 1st October. When the exchange rate was 2 groat to 1,300. Okay, I'm sure I've explained. Now, the machine is non-monetary asset measured under the cost model. This is not to be translated at the exchange rate. Now, so the modification cost now of 30,000 are also going to be added on the cost of the machine. I'm sure this we've explained several times. So the total cost of an asset at that particular the year end, it will be 270 because the modification cost and that one needs to be added. The machine is depreciated from September, the date it's bought into use. Very, very important. At what point do you begin to depreciate the machine? Not the date of purchase. Not the date you are making a payment, but the date when it is brought into use. That's why such a kind of information was very important. So it was brought into use on 1st September. So 1 month, because 1st September, 30 September, the year end. So it has to be depreciated by 1 year. So it will be depreciated by 1 year. I think the depreciation now is at the useful life of the machine, because the total cost of the machine after we've put 240, the purchase price after translation. We've also added now the 30, which is a modification. So the total cost is 270, and the useful life for that asset is 5. So we're dividing by 5, and now that dividing by 5, meaning it's giving a depreciation for 1 year. But we are not interested in the depreciation for 1 year. We are only interested in the depreciation for 1 month. That's how we do now 1/12 to find the depreciation only for 1 year. And so the depreciation now will be $4,500. Now this depreciation will be posted as an expense. On the other hand, so the machine will be shown as a non-current asset at a closing value of 270 minus depreciation. Very, very important. That is how you account for this kind of a question. So let me go back to the same question. So the question was asking, it was very interesting because a number of things are here. Number one, the asset was bought on the 1st August, but the year end is September, meaning 2 months after is it August, September? Yes, 2 months after the purchase was done. But this asset was not paid there and then, meaning it was paid at the year. It was paid in October, after 1 month after the asset was bought. And then also, other than the purchase cost, there was a 30,000 modification fees, which forms part of the cost of an asset as initial measurement, as dictated by IAS 16. Now, these are the rates that were applicable. So even to answer this question, there are a number of things that you must always note. The date an asset is brought into use is only important for the purpose of starting the depreciation. you only begin to depreciate the asset on the date it was put into use. That's number one. Number two is that when you are collecting the total cost of an asset on the date of purchase, and the rate applicable on the purchase date, that is what we use to capitalize an asset. So on the date it was bought on 1st August, the rate that was applicable, that was 2.4, 2.5, that's the rate that you use. And now, even when you got at the year end, an asset is non-monetary item, so you cannot retranslate. No. The same value of 240 will still apply at the end of 2020 of 30 September. But the corresponding liability, because this asset wasn't paid there and then, it was paid in October, meaning by the time where the year end we are closing the accounts in September, we still had a liability that had stayed for 2 months. So now, because of that 2 months, we need to retranslate that liability on that particular year end, so that we see whether there is a gain or a loss. So in this case, you find that at that time, the growth actually has gained in value, where it was now 2. So you retranslate the liability. That is what we are saying now. In the note we're saying, therefore the machine associated liability would be recognized in financial statement using the rate of exchange in force at transaction date to growth. Now, so it will be this I've explained. Now the liability is a monetary item, so it will be retranslated at the end of September using the closing rate of 2 growth. So now you see that because the machine is going to be paid 3 months later. Now, in fact, just at September, the machine we've already lost actually $60,000. So by the time we're going to pay in October, I'm sure if we go there, you are going to find that there will be another loss, but not as 60,000. So this is how you attempt this question. So you need to understand that the difference between the actual, which if you bought a machine on cash, it was going to be 240, but now we paid 3 months later. So even on September, just by September, even before we reach the October, we already incurred $60,000 in terms of loss. So if we go up to October, the company is going to lose more. It's going to incur more expenditure. I thank you for today. Thank you so much. You were able to submit some comment in the question.